morning, everyone. Welcome to this morning's edition of MPC Markets Morning Call, 12th of August 2025. Investors take some money off the table as inflation figures loom. So it was a relatively quiet night. We saw the Dow down 0.5%, the S&P down 0.25%, the Nasdaq down around 0.36%. Aussie did rally yesterday, more so on the back of the materials sector, lithium sector, and obviously we've got the RBA decision coming up today at 2:30, widely expected to be a rate cut, as Michelle Bullock telegraphed at the last, to the media discussed at the last press conference. Hopefully they get what they wanted today, because it was borderline disgraceful, the amount of disrespect they showed the Reserve Bank governor at the last meeting. Mainly because they were wrong. She did say that rate cuts were coming. It was just a matter of timing. So, and here we are 4 weeks later. There's still little certainty around tariffs. President Trump has pushed the deadline for China yet again. The April 12 cutoff will be tonight in the States. He's now pushed it by a further 90 days to November 9. Which is a bit surprising considering he announced a deal, in inverted commas. Traders have now, and investors and economists have now really come to the consensus overall that the tariffs will settle somewhere around that 15% mark, and there is no deadline. So I think we've all sort of realised that how full of crap he is and what he's trying to do. I mean, it was fairly obvious early on, but now it's just bleedingly obvious. So look, we'll have some uncertainty over US-China trade over this period, but to be honest, I think the fact that they're at the table and the fact that China's been very quiet and not retaliated, full well knowing that they're holding all the cards, that this will come to some form of reasonable resolution at some stage. But trade deals with the two biggest economies in the world, it's not going to happen in 90 days. I would fully expect this to just drag on over time while he bullies some smaller nations into doing some deals. And perhaps that was the whole point, when maybe the focus wasn't on China. Maybe he knew full well that they've got a decade to 2 decade head start on, locking down supply chains, etc. And China's silence is merely just trying to get some tariffs increased, so some of the manufacturing returns back to China. Who knows? We'll never know. But he's also scheduled to meet Vladimir Putin in Alaska on August the 15th. It's kind of neutral ground. They did buy it off the Russians at some stage. I sort of go back to when they were saying that Trump was going to buy Greenland. Alaska's a precedent. So's the Louisiana purchase, etc. So, but yes, Alaska used to be owned by Russia. But the first meeting is from the two countries since June 2021. Putin's been very quiet as well. There wasn't much out of the BRICS meetings, so I think they're, like a toddler throwing a tantrum. I've got a fair few kids. The best tactic is to just let the sugar rush run out and not engage overall. So we do have CPI, PPI, and retail trade looming in the States, and I think that's why investors have taken some of that money off the table. I don't see those inflation numbers being high personally, just on the back of the fact, I think we spoke about it in yesterday's morning call, that he's fired the Labor Statistics Commissioner. And then cut a bunch of jobs from the Bureau of Labour and Statistics. I dare say whoever is now in charge or has been handed the job has possibly got the hint, wouldn't even need to be told that they would like those inflation numbers down. And they do muck around with the inflation numbers all the time, and they readjust them. And half the time, if something's inflationary, they just take it out. I mean, that's why the Fed uses PCE because the inflation numbers are a bit of a joke. But they started removing weightings for rent and all sorts of stuff long ago, and then they use heavy weightings for things like electronics, which have maintained very stable prices, or gone, or obviously technology upgrades make the same item cheaper, which helps the inflation numbers down. So, yeah, I mean, it is widely watched by markets, don't get me wrong, but the PCE is a much more reliable number on inflation. The Economist also has a very reliable, the Economist is a magazine, one of the only independent markets publications out there these days, and they call it the Big Mac Index, how much a Big Mac costs in every country, and they've been running that for about 30 years. It's actually fairly accurate, all things considered, because obviously McDonald's model is pretty standardised across the world, including ingredients and labour, etc. Having a look at the heat map today, that services sector drifted lower a little bit. Interestingly, Tesla was up 2.85%. So Texas has given the all clear for robo-taxis to run in the US, in Texas, statewide. After that trial in Austin, which is a whole new revenue line for they'll be able to compete without supervision drivers. They'll be able to compete with the likes of Lyft and Uber, etc. Throughout the whole state of Texas. It's a pretty significant step, and Tesla actually looking pretty constructive from a technical basis now. We bought into earnings because I thought it was going to be a big Elon's back. He was quite dour overall, and said a few things that were pretty positive, but I think it was around about 317, 310 at that stage. I think it closed around about the 330 mark. But it's always very expensive, Tesla. But if the robo-taxis thing does start to gain quicker approvals, and Elon said could be up to 50% by the end of the year, everyone sort of chortled and laughed and said not a chance. But I don't think anyone expected Texas to get the statewide approval and be able to compete this quickly either. So I think with the robo-taxis rollout, they will become a passenger transport business rather than just a motor vehicle business. And with Trump's push to bring back manufacturing to the US, you're going to have a bunch of new manufacturing facilities being constructed and made. Elon's robots are going to be an option, and he does expect to ship some soon. Very small amounts. I think he's got them working in his own factories, etc. The advantage of the robots is as well as you can repurpose a production line very quickly. So you can go from making, I don't know, a smartphone to a laptop in a production line, but it obviously would take a lot less time, no retraining, no labour. And we're talking about some of the statistics that have been thrown around with the Optimus robot or automated robots is they basically would run for around about $5 an hour, and they would do the equivalent work of two $25 an hour employees. So we're talking about a $45 saving and one less headcount. So, and they don't have, the robots don't have unions. They don't need breaks, and they can work 24 hours a day, and they're not going to complain. I've also seen footage of them. Actually, they have stacks of batteries for themselves. They literally, once they walk up and they actually replace their own batteries, keep going, etc. So, it's pretty impressive stuff, very futuristic, but, the future seems to be coming a lot faster than we think. Micron had a good night last night as well. They increased their fiscal projections for Q4 2025. Stronger pricing and efficiency across the operations. Nvidia and AMD remain under a little bit of scrutiny. There's a few reports out there that their governments, that they're going to pay 15% of their AI-related revenue from the sales to China for particularly for Nvidia, the H20 chips, to the US government. Which again, I find myself hating the way that Trump goes about things. However, these companies' margins, they don't pay tax anywhere, basically. I think the average tax rate, if you include all the subsidies, is somewhere between the 14 to 16% mark. Their margins continually expand, and their tax rates continually drop. Obviously that's pushing all of the debt to the US government. At some stage, that expansion of margin can't continue. They've got to give something back. They can't just keep taking advantage of the system. They don't have to have. So that's effectively a little bit of a tax. And again, I tend to agree with it because a lot of these companies, particularly, run a model where they might be incorporated in the Cayman Islands or in Ireland or whatever, where they're tax havens. They go and make money in countries all around the world, and then they charge in inverted commas, a software licensing fee, which brings down their net profit. Brings down their net profit in that particular country, and they avoid it's blatant tax avoidance. So, it is something that Europe's had a problem with, that Australia's had a problem with, and the US hasn't really cared because obviously those profits are going back to shareholders who are usually US based, and I don't see that as a major problem, particularly with Nvidia's margins being above 90%. So it's I think that's a fairly solid move. China's now paranoid with the H20 chips that there's the fact that they're being made available to them, that they're going to do a Huawei on China's big electronics and chip manufacturer, Huawei, obviously, and had some listening devices or the like, or some data monitoring devices in them, and they got caught for it, which is why they got banned from being able to be government contracted computers and phones in Australia and the US quite a few years ago. So I think the Chinese are a little bit paranoid there, and look, probably paranoid for good reason. Who knows? It's not like it hasn't happened before, a number of times over history. We just got Seven West Media today. The focus is going to be on RBA. JB Hi-Fi yesterday was a pretty interesting bit of price action. They opened up, which was kind of the opposite to what I thought, because they're not. There's no way they could justify their current share price, but they opened at 120, and then got absolutely belted, down about 8 or 9% in the end. JB Hi-Fi, Wesfarmers, Commonwealth Bank in particular are three companies that are attracting so much of that index money. It will be interesting to see what Commonwealth Bank does on Wednesday as well, because there's absolutely no hope of even going close to justifying the multiple that they're on at the moment. And I would expect, to try and find some patterns in those, in those sorts of stocks that are really overvalued at the moment. There was even an article in the AFR, which around essentially Australia's big problem, that so much money has been sucked to the index, the passive index ETFs, and Australian investors are, there's so few of them now, and fund managers, I've always complained about fund manager laziness and benchmarking, that it's actually now causing a problem because there's no money going into anything outside of that top 50. And quite often, even out of that top 50, the mining stocks are really not attracting a hell of a lot. But yeah, so we did have CoreWeave actually overnight. I thought that was on Tuesday, but we obviously that was overnight. It was up 7%, and they doubled. JP Morgan more than doubled its price target. So maybe the result is actually tomorrow morning or tonight in the US. But yeah, it was up 7% leading into earnings. Obviously, Oclo was down 4%, but nothing of any major significance really in terms of the corporate earnings front. Mondays are generally not particularly busy. So Commodities, gold and silver were down. US dollar was up, which is probably a fair chunk of that. They had a good run. There was talk about tariffs on gold. Trump's denied that. I think, general tactic, he floats something out there, sees how the market reacts. If it doesn't react the way that he wants to, he obviously just says, no, we weren't going to do that. Platinum, crude were fairly flat, as was, the Aussie dollar was down a little bit. Uranium was down less than 1%. Crude was down 3%. But we saw iron ore yet again up 1.6%. Iron ore's heading towards those sort of year highs or February highs again. I think that that relaxing of China property ownership rules and the reduction of the amount of deposit you need to buy that second property is big news. We've been waiting for that China property sector to show some form of recovery for probably 3 years now. If iron ore starts to take off, things like Fortescue and BHP are probably about 40% cheap, I would expect, particularly BHP with its copper and uranium reserves. It's really only iron ore holding it back there at the moment. Lithium was limit up again. We saw massive moves in lithium over yesterday. Liontown and PLS, Pilbara, were up between 15 and 20%. We had, obviously, some permits were revoked for one of the big lithium miners in China, and it was a limit up in the futures. And then, obviously, the lithium ETF overnight. It also carries on from the Australian market because there is quite a few lithium, but names from the Australian market in that HLIT ETF, but mineral resources as well, back around nearly $40. So that was around $20, and everyone was panicking about it. MinRes is my bogey stock. If you ever hear me give you an opinion in MinRes, do the opposite. I've got a pretty good track record. But yeah, nothing to majorly report, to be honest, overall. And just a quick reminder as well, we've got that ASX earnings preview for CBA, Jabby Hi-Fi, Temple Webster and Car Group. Just go to the education section at mpcmarkets.com.au. Jonathan Takadina will be running you through the morning call tomorrow morning. I will be away, so I will speak to you again on Thursday. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.